as this market finally decided to give the banks the credit they deserve. When JP Morgan, Citigroup, and Wells Fargo reported on Friday, it sure didn't seem that way. Even a strong quarter from JP Morgan was enough to get the group rolling. Yet when Bank of America reported a great number this morning, the group finally caught a bid. It marked a huge turn for the big money centers. Bank of America delivered a terrific 6-cent earnings beat off a 57-cent basis with higher than expected revenue and robust loan growth, rising deposits, aggressive cost cuts, and superb digitization. Basically, Bank of America proved that they don't need high long-term interest rates to make a killing here. So could this mark the beginning of a longer-term rally in the financials? Let's check in with Brian Moynihan. He's the chairman and CEO of Bank of America. Get a better sense of the quarter and what his company's prospects are. Mr. Moynihan, welcome back to Mad Money. Good to see you, Brian. Have a seat.
Good to see you, Jim. Thanks for that.
There are so many great lines in this quarter. You got exceptional loan growth, the fact that you can return so much money. We're going to get to those. The $2.8 trillion deposit base. But I am struck by the digitization. You are well ahead of all the other banks. And tell us what that means for you and for shareholders.
Well, if you think about what digitization means, it means better convenience for the customer and lower operating costs for us and more assured transactions, more straight-through processing that they used to call in the securities business. Right. But think on a consumer business, customer interfaces, it enables the process to work better. And all that produces a good result for the customer. Our customer service scores continue to go up, while at the same time, the cost structure in the consumer bank especially continue to come down and got to 48% efficiency ratio this quarter.
Now, how about how many millions of people are using digital devices and how many are active mobile users?
So you start from the high level. We're at 35 million plus digital users, which would be any device, computer screen, coming to bankofamerica.com, et cetera. 25 million plus of those are mobile. In other words, they're going through an app. They logged in 1.4 billion times this past quarter. That's up 500 million times over the last year, probably. And so there are a lot of people using it, a lot of people using it. Those are active users. They've had to actually use the app in the last month actively to do something.
Wow. So give me a sense of what that means. How much are you able to save from just having plain old brick and mortar operations? It would seem that this is a considerable saving versus that.
So you have to go back about 10 years when we started seeing the impacts of this. So, internet banking started in the mid-90s, dial-up servers. It was all took a long time to take off. What happened was with the advent of the smartphone and the iPhone and things like that, you saw this thing take off. And so if you go back 10 years ago, we had 6,100 branches. Today we have about 4,400, 4,300. You had 100,000 teammates working in that business. Now you have 60. But importantly, you had 12,000 who were relationship managers. Now you have 25,000. So you've had this massive switch in terms of what we do in the branches and the customers. So it is high touch and high tech, and that requires both.
Well, I would guess from someone from the business, I would say you have more revenue producers than you have people who don't make money for the bank.
Well, I would say that's true, but I think you have to remember that we're a service business. So you come in and need a power of attorney. That may not produce instantaneous revenue, but why you're asking for it probably has something to do with something that's going on in your life. So the relationship managers, they're enhancing that relationship rather than just taking a check over the transom, which there's not a lot of value-added view to that, the customer. Just get it right, please. Whereas if you come in and I have a question about I need a mortgage, need a car loan or a card loan or something like that, or more importantly, my mother's sick. Hopefully she's not, but if my mother were sick, I need some help for a power of attorney for her medical or move her accounts and things like that. That's what you want to go on in branches. Even on a service base, you want those really interesting, hard questions where people need real help.
Now, we on Mad Money care passionately about buybacks and dividends. It looks like the government has really greenlit you versus a year ago. It's a sign of your health.
Right. And we've just been building that up. So if you go back over the years, we've been asking for more and more and more. So last year, in the first approval, we got $17 billion of total, almost 18 in capital return. This year, we got 26. Last year, we also went back and got an extra 5 when we redeemed with the Buffett warrants, and he converted into common. And so that's been a great move for us. The $26 billion, it's getting pretty close to the earnings level it's projected for us. And dividends will be moved from 12 cents to 15 cents a quarter, or 60 cents a year, which gets us at $30 price, a $2 yield. It's a 2% yield. It's all good.
Now, a lot of people are fretting that perhaps loan growth is slowing down. Your loan growth figure indicates the opposite.
Yeah, we point that out to people. I beg your pardon, we never promised you Rose Garden. We never promised 10% loan growth because the way we run the engine and the way we client select and the way we focus and prime consumer is such that we're growing. But if you looked in our materials today, you saw that year over year for the last 4 second quarters, we've grown basically 5 to 6% every year over the previous quarter. And it's just consistent, grinding it out, good high quality loan growth that customers want and that we can get paid back.
Right now, after the close today, Netflix reported disappointing quarter. What does that have to do with Bank of America? Well, you have Erika. And it looks like Erika's doing the opposite of what Netflix is doing tonight. That's been very strong growth in a very short period of time.
Yeah, so you start with that mobile application in 25 million customers' hands. So the question is, you have to type in it and you have to do all the things. What Erika does is an artificial intelligence, voice-activated or text-activated engine that changes your interface dramatically and starts to anticipate what you need. So, for example, if the other day I opened it up, I said I wanted to pay someone a bill. I just said pay. In that case, it was a landscaper, $422. It found the person. It said, do you want to pay $422? Yes, it's done. As opposed to typing in the name and finding and scrolling through and everything. It's just an easier way. And then after it learns more about me, it will start to plan my finances. It'll tell me I'm spending more than I earn, or whatever the case may be, or I'm spending a lot. If I want all the payments I've made for restaurants, it'll tell me at that time out of all my accounts what we've made by type. And so it's an artificial intelligence thing, but initially it really just works to help me be able to use the device much more to my benefit.
I mean, to me, when I hear this, I think, okay. Well,
but let's just remember, it went from starting to 2 million users in about, we are 50,000 in April, and we're 2 million today. Well, so it's just taken off.
But a lot of those people have to be millennials who otherwise would think that maybe I should just go and be on PayPal. Not that PayPal isn't a partner.
Well, PayPal's more on the payment side with Zelle and stuff. Right. But in terms of our mobile capabilities and core mobile banking go far beyond the millennials. I got asked the question on earnings call today, is this millennials? You say, well, there's 35 million digital users. There aren't enough millennials to do that. And so it spreads across all age cohorts, even guys as old as us, Jim. But the reality on the millennial side, the take-up of something like a Zelle or a Erika is going to be a little bit more people are used to using their different devices at home to talk to and have them activate stuff. That'll change over time. I use it because it's just easier for me because I got big fingers on a little phone. It's hard to type.
Bank of America has a great call on what our country looks like right now. I got great confidence after listening to your call, thinking, you know what, stop being gloomy. It looks like business is pretty good in this country.
So we start, and you think about the U.S. economy, 2/3 driven by the consumer, 70%, whatever people say at this moment. And we get good insight in the consumer. So for the first 6 months a year, our consumer spending, which is checks written, cash out of the ATMs, cash over the tellers, bill payments, debit and credit cards, wires, ACH, Zelle payments, is up 9% over the first 6 months of last year. That was 6% the year before that and 3%. So we've gone 3, 6, 9. That's acceleration in consumer spending. And I would posture, leave aside some completely out of character risk out there.
Right.
That if the U.S. consumer is spending at a 10% growth rate year over year, that is a good thing for America and the economy will be in good shape. Now, that is on about $1.4 trillion of dollars spent. So it's not a small sample when you think about double that to almost $3 trillion for the year and think about that size relative to the economy. That's just the consumer side. That's literally you or me sending money to our account. So you think about that growth rate, that bodes well. I heard from our team today that our internal people, because of tax reform, because of deregulation, are probably saying that they're going to the good team Bank of America Merrill Lynch, the research team is at 4% GDP growth for the second quarter.
What?
They've moved it up a little bit. For the whole year, 2.9, 3%. But this quarter, they think it might have a 4 handle in it. That will be a big number when you think about it. That's for the second quarter, and you're seeing more people come along. So whether it's 3.8 or 4, that's a big number. And a relatively solid retail sales revised up heavily. You see that consumer spending, all that bodes well. So we feel good about the U.S. economy. Now, is the unknown of this out there as an unknown of that? There's always an unknown. But right now, the people are employed. They're making more money. Tax reform has benefited them. Tax reform has benefited companies. And you're seeing that flow through the economy.
What a great story. Great story for our country. Great story for Bank of America. That's Brian Moynihan, Chairman and CEO of Bank of America. The stock is too cheap. Stay with Cramer. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.